Hello once again and happy Sunday to you. This is Bearable FX and I'm Bearable King. Welcome to the month of July. Yesterday I posted the monthly review of gold, EU and GU. And right now we want to do our weekly analysis to see what the market has in store for us today. Right now we have news tomorrow afternoon by 3 p.m. ISM manufacturing. Then, as we all are aware, July 4th is Independence Day in US, so there's going to be bank holiday. So we should expect low liquidity on Tuesday evening. Then Wednesday, OPEC is having meeting and FOMC meeting is also on Wednesday by 7 p.m. Then we have non-farm employment change, unemployment claims on Thursday, and job opening. So we're going to have a volatile Thursday afternoon. And on Friday, the Bank of England's governor is going to be speaking by 8:30 a.m. And in the afternoon, we're having unemployment rate. Overall, we have medium level of activities for this week, so we can expect some form of liquidity here and there. But take cognizance to the fact that Tuesday we may have low liquidity between the time of 5 6 p.m. to 10 11 p.m. GMT time. All right. If you've not clicked on the subscribe button, please do so now. Without wasting our time, let's move to the charts and let's see what we should be expecting. Okay, fantastic. Now on the charts, I'm starting with my favorite, which is gold, GBPUSD. All right, goes without saving. All right, so we have GBPUSD, and about 2 weeks ago, I mentioned that was since this price broke this level, I was anticipating that it could touch this point and then pull back. Now, you'd be wondering, why do I have this point as my point of interest? So we had the market move from down here, up here, and then it made a significant pullback. And after this significant pullback, it came up here. Now, after doing this, the market is meant to pull back. Initially, I was expecting the market to stop here because this was the previous resistance point. All right, but what happened was the market trickled down a bit. I don't know what's happening here, but what I could do is I could always refer to my Fibonacci. Okay, so if I apply my Fibonacci from this point to this top, being the last significant move, what happened? I have a nice rejection at 61.8 fib level. All right, and if this level holds and the market should pull up, then I can expect the price to come as high as, let me see, I can expect the price to come this high, which is around $2,244 per ounce. So what am I saying? I'm saying that if this price should reject this point and go up from here, I'm expecting this market to move from this area to this area. All right, just note this as a possible swing trade because we have a nice rejection here. We have a morning star set up here. Let me zoom in a bit. We have a morning star set up here, which shows that we may have a bullish move to this upside. Okay, and if I'm to calculate the number of pips from here to here, we have roughly about 3,300 pips here. Yep, about 3,300 pips for the bargain. I'm sure a lot of swing traders are actually looking, and position traders are actually looking at this opportunity to buy from this point all the way to the top here. Okay, so it's something you can take advantage of. If you are a swing trader, you could take advantage of this point. Now, aside from this point being 61.8 fib level, we have an order block here. An order block is usually an area where the price comes back to retest. So we had a bullish move up, we had a small pullback before the market moved up, did this range before coming down to this point. And right now you can see that it has filled this order block and we may have a rejection from here. That's what I'm expecting for this one. That's the reason why I was expecting this month to be bullish. All right. Now I'm going to go to the 4-hour time frame, because if you want to trade for the week, you should be able to review what is happening on the 4 hours, and then you can go to a lower time frame, say 30 minutes or 15 minutes, to trade for the day. So every weekend I do my analysis on daily and 4 hours, so that on the 4 hours I can show you what I'm expecting for the week. If it plays out good, if it doesn't, good. We take advantage of the market as we see every day, which is the reason why I encourage my friends and my trader clients to always join my Telegram group. The Telegram group is at BearbullFX. All you simply need to do is send me a message on BearbullFX. Say hi, I would like to join your free signal page, and you would have access to it. I drop minimum of 500 pips every month, free trades for everyone on that channel. All right, so as I was saying, we have a morning star here, which is a strong indication that this price may move upwards. Okay, so since we're looking for opportunities to buy on the lower time frame, we'll be looking for opportunities to do what? Take advantage of this market to the top. But for this week, let's see what we are meant to expect from the markets. All right, fantastic. So right here, I'm just going to use this to explain. So we had the price come from here down to this point. From here, it pulled back up here. From here, it had a bit of a range here. And then from here, it came down to this point. And then from here, it pulled up back to this point. This was the support level. It was broken. It now serves as a resistance here. And then from here, what happened? It gave us a new low. And now we can see the price pulling back up. Now, here is one thing you need to learn about when a price pulls back up. As this price is pulling back up, the first point of interest is usually somewhere here. Now, two things can happen. This price can pull up here and pull back, or from here, it can just keep going up, giving you a W setup. But because I'm looking at the left to trade the right, there is a proverb that says to trade right, always look left. So I'm looking at the left and I'm expecting that this key area of interest may be respected. And if this is respected, then we may expect that the market will do what it has done here. Please take note of this. This point is a strong area of interest as well. As you can see, the price has bounced here previously, came up, came down to bounce here, came up, broke it here, it has retested it. So there's a high probability that this price may move from here all the way to the stop point. And currently the price is at 1,919. So it's possible for this price of gold to move from this area all the way to 1,334, 35, 31 to 35. Let's say this is 32 and the high is 36. So within 1,932 to 1,936, then we may see a rejection that will bring it down, and then it will give us a head and shoulder pattern. Now, if you're aware about how heads and shoulders work, it is very simple. Head and shoulder patterns are patterns that shows you that the market is reversing. So if we have a head and shoulder pattern like this, we can expect that this market will do what? Continue moving upwards. That's what we're meant to expect from the market. Okay, now I'm going to zoom in a bit to show you something here. So we had this here. See this. Can you see that? That is a nice head and shoulder pattern. So the price may pull back a bit, maybe to this area, before moving up here. Then from here, we can expect it to pull back to this same area to retest this point. And then from here, we may watch it break above this point. But if it breaks above here, then we can expect it to come to the next point, which is around 965. Okay, so what am I saying in general? I'm saying first move that we're expecting on gold is that gold should move from somewhere around here because of this place, because of this point, right? We can expect that gold should move upwards from somewhere around here to 1934.35. Then from this point, if we see a rejection pattern, we may take a counter trend trade and ride the market back down to this area, which is around 1912. It could drop lower, it could stay above it, but once we see a candlestick confirmation of a reversal, then we may take a buy, and then we can mark for the new high, which is around 1965. This is very possible, but we will need to watch what the market is doing next week, and at those key areas we will take advantage of the market. What are the key areas? One, we have our first key area of interest around 1911. Then the next key area of interest will be around 1932. Then from there is either it comes back to that 1911 or goes up to 1965. But I'm expecting a reversal pattern. Once we see a pattern like this, all we simply need to then do is take our trend line from this point to this point, mark it and drag, and for every bounce opportunity that we see the market do, we can simply take a buy and keep buying for new highs, meaning that the market is about to enter an impulsive move, okay, an impulsive phase. So we can take advantage of the impulsive phase and buy. Okay, that's what we're expecting. If I take this high and I draw it down this way, you can see that the trend has been broken, right? So since the trend is broken, what we can expect is the price should come down a bit to retest this before moving up. And once it moves up, it may come high here, then come back here, then you see, so everything is pointing upwards right now. So let's just mark these areas of interest and take advantage of the market. Okay, so for this week we'll see opportunities to buy and sell, but we should take more advantage of the buy opportunities than the selling opportunities. Okay, on the daily, remember that we are also expecting a sort of head and shoulder pattern, right? We're expecting a sort of head and shoulder pattern on the daily as well here. So if the price should break up to this 1.6, then we may expect it to do an expanding triangle setup as it did here. This is a triangle setup, so we may have an expanding on the other side before the market starts running all the way to the top. So all we simply need to do is take advantage of it and note this key level, which is around 1935, 1936 region as the base to buy long term on the daily time frame. But on the lower time frame, we could take advantage of the up down movement in between these points before the break to the next level, and then we move upwards. Okay, now on British pounds, American dollar. Okay, so we know that we've been on an uptrend because we had a range here. And after this range, the price pulled back a bit and gave us a new high. So we have a low, high, higher low, higher high. Alright, since we have a trend line going up, it's best to look for a buy around this trend line. It's best to look for a buy around this trend line. Now, why am I saying this? I know we have a sort of bullish push here, but this bullish push is yet to create a new high here. So it is still within the bearish setup, meaning that this price may still come down to this area, retest the trend line, and then from the trend line we look for opportunities to buy based on candlestick confirmation. And it's a no-brainer. If you're entering the trade around here and the price pulls back to the trend line, so let's say you buy around here and the price pulls back to the trend line, that's about 150 pips stop loss. So right now our patience is being tested. We need to wait to see the market come and touch this trend line, and then from this trend line we can either see the market reject it or bounce off it and move upwards, or we can watch the market break below it, then we'll look for a pullback to sell to a lower point. But personally, because we just broke out of an overall range here, let me draw the range for you. So we had this, and then we had this. Okay, so the market just broke out of a range market, which I spoke about in the monthly review. Since the market has broken out of this range, we're expecting the market to do what? Keep on going up. And now that the market is pulling back, it's best not to allow FOMO force you into this market here. Rather, wait for the market to come back and retest this point before looking for a buy trade somewhere around here. Okay, now I'm going to go to the 4-hour time frame to see what we may have this week on GBPUSD. Alright, fantastic. Okay, so if you remember earlier, we had this downward channel that I spoke about some months ago, in May to be precise. Then what happened? We had a breakout here before this bullish push. So we had a move from here, one up here, then we had a pullback before this impulsive move. This impulsive move did 1, 2, 3. Okay, now I know a lot of people are wondering, is this Elliott wave? Is this not Elliott wave? Yes, it's Elliott wave applied to price action. And the reason why I'm using it is because as kids, there are so many things we learn while we're growing up: memories, experiences, actions, and those are the things that make us who we are today. So Elliott wave is something I've learned while growing up, and now I'm applying it here. So follow this. This price broke out here, had a pullback. We had a push here, 1, 2, then 3. Okay, then after that, this is a 1. The price came down here. This was a pullback. Then the market had a 1, 2, 3. Now what we have here is a form of correction, and personally I'm expecting that this price will come down to 61.8 fib level of this overall move. Okay, so what am I saying? I'm saying I'm expecting, or I'm anticipating, that from here to here, that this price may come and retest this 61.8 fib level somewhere around here. Remember that we have a bullish flag here. This is a bullish flag. Let me delete this. This may get a bit confusing. Let me remove this. So we had an upward trend here, which is an impulsive move upwards, and now we have a range market. So right now I'm anticipating that this price, in as much as it bounced off 50, it hasn't touched the original trend line. So I'm expecting that this price may drop from here to this point this week, and from here it may break out above this point, then come back here before we start the upward movement. Okay, this is also an impulsive move for a wave 5, the final wave. Okay, so I'm anticipating that the price may fall here and we may also have a buy here. What am I saying? The safest thing to do in this market will be to place a buy somewhere around here and to look for a buy here on confirmation. Okay, this sell may not happen. If this sell does not happen, we may have the market say break above, create a new high, pull back, and then rise. Now, if this happens, we would look for a buy somewhere around here. Okay, so we have two options here, and we are heavily dependent on the market right here. I personally am expecting this market to come down to retest this overall trend line, and if I see a reversal candlestick confirmation around here, which is around 1.2558, I'll be looking for a long-term buy to this point being 1.313. 1.313 from my entry around here would be roughly about 580 pips. Aside from that, I'll be looking for another buy when the breakout happens here to add to this and ride it all the way to the stop, which is roughly about 480 pips. So combine 580 with 480, that's roughly about 1,000 plus pips. So I can just wait for the right opportunity to take a long-term buy on GBPUSD. I normally apply Fibonacci to know areas of interest where the price could pull back to and areas of interest where the market could extend to when it's moving in a particular direction. So right now we have this as the overall trend line. This was gotten from the daily time frame, if you remember. This is the trend line I showed you on the daily time frame, but this was the current trend line which has been broken, and you can see the price has been maintaining this high, and right now the price is there giving us a nice possible inside bar setup for a drop to this low side. All right, I don't encourage you, if you're not experienced, to counter trade, but if you want to, you could actually look for a sell around here. Set your stop loss about 10 pips above this high. If this high is 27, okay, you could use 20 pips, so you could use a 40-50 pip stop loss, right? And you set your take profit for this point. Okay, so you're risking about 50 pips to make 150 pips, and immediately you take this counter trade. If it does happen like that, meaning that we took a sell from here to this point, then on candlestick confirmation you can actually look for a buy trade. Okay, a buy trade meaning that from here you can take a buy. I would normally tell you to leave your take profit open, but if you want to set it, I've marked the point of interest as 1.313. Can set it, set your stop loss on confirmation of candlestick confirmation, maybe 50 pips. So you're risking 50 pips, I am making about times 10 of it. All right, and if this moves well, breaks out and pulls back again somewhere around here, you take another trade somewhere here, when you take the trade here, on candlestick confirmation, you move your stop loss above. Okay, this your stop loss here, you move it to this point. So you've locked both trades, they are risk free, and you're expecting about 1000 pips. Okay, so altogether on British pounds US dollar, I'm expecting nothing less than about 1200 pips. Maybe not for this week alone, but possibly till the end of this month. Let's see what happens and let's see how the market goes. Remember, what we're basically doing is we're analyzing the market. We are not certain because we are not future tellers. We are only trading based on what we can see. Or let me speak for myself, Bearable King. I'm only giving you this based on what I can see, and this is what I'm expecting from the market. So you take trades based on candlestick confirmation and trade at key levels. So I've marked the key levels in this chart, and those are the places I'm expecting the market to move to or move from. Okay, all right, fantastic. So this chart is as clear as the day of light. We have an impulsive move, but we have a correction of 2. This should be 4. Then we can expect a 5 movement upwards. Okay, that's what we're having for GU. GU being pounds US dollar. Now this also coincides with what I'm expecting on the daily time frame. We have an upward trend that came down here, and this price came up and now is retesting this point. I'm expecting that this market may move up a bit towards this area. Okay, so I'm expecting that this market may move up towards this area. Let me apply Fibonacci to show you what I'm saying. So I have 0 here, I have 1 here, I have 2 here, I have 3 here, I have 4 here, and I'm expecting 5 somewhere around here. So this is what I'm expecting basically, sort of an expansion plan. If I put this here and I drag this like this, then yeah, so we're expecting something like this, a 5-wave movement, an impulsive movement, because the market is what's bullish. Okay, so when we get to this point, then we can look for a correction and a drop from there. Is that okay? I hope this is clear so far. If you have any questions, you can reach out to me on Telegram, or you leave the comments below on YouTube and I'll respond to it. Finally, we're going to Euro USD, Euro dollar. Now, my current problem with Euro dollar is the market is within a range. These are the last high and lows that the market has created, and everything that has been happening as far back as April has been within this range. Now, the problem with corrective range are it's the best areas where markets can be manipulated and funds can be taken from traders. All right, you can buy thinking that, oh, the market is going to go up, and instead of the market going up, the market will fall down. In between these two levels, demand and supply, bears and bulls, are going to have a dirty fight. And the problem with when bears and bulls are fighting is the grass. The grass is going to suffer because we are the grass, the retail traders. So right now, if you observed, I only traded EU last week towards the end of the week or the month of June, and that was because I was expecting a drop here. Remember, in my videos, I've always mentioned that because the market came this high as far back as May, I said I was expecting it to reject the 79 fib level, which is what happened here. And because this has happened, I've always mentioned that I'm anticipating a possibility that this price could fall to this zone, and then from here we may see a buy. Alright, so this is what I've always said I'm expecting from the market, and anybody that got in around here, the 79 fib level, right now you should be up about 89 pips, but at some point in the week you are up about 160 pips, which is not a bad score if you ask me. So right now I'm still keeping my previous bias that EU may drop back to the original level. But before it does that, it needs to break some particular areas. Okay, let's go to the 4-hour time frame to see what we're talking about. Fantastic. Now I gave this last week or last weekend. I said we had a push up here. Here we had a divergence. We had a divergence here, which gave room to this sell. Now here we had the price come up here. It came down here and gave us a higher high, which is the reason why I've marked this as my first low and second low, and I drew this original trend line. And this original trend line was the line that was broken after this downward movement was made. Okay, so we have this movement here, and I said if this breaks below, that we can expect it to pull up, and then from here we're expecting it to fall down, which is what happened exactly. If you notice, it took the point and started coming down immediately. Now right now, let me remove this as well. Right now what I'm waiting for is I would like to see the market's reaction along this trend line here. Okay, I'm not asking for too much, I just want to see what the market will do around here. Of which, if we're going to look at this, we've had a high, low, higher high, lower high, lower low. And since we have this, we can assume that we have a downtrend. Now the price has pulled up, we can expect it to possibly come down to this area. Now once you have a, okay, let me just note it for explanation's sake. Alright, so we have a high here. Then we have a low here. Okay, now we now have a lower high here, and we also have a lower low here. All right, so see this here, we have a lower low, but it's not really significant, but we have a lower low. Sometimes I even take this as an equal low, right? So what we can expect here are two things. Since we have this, we can match this high to this high and draw it down. Okay, and since I've drawn it down, you can see that the price has pulled up. If I take it to where the candlesticks are, you can see that it has stopped it here. You can see it has stopped it here. Once we have this setup, as long as this setup is not broken above, we may expect the price to do what? Come down here. Alright, now similar to what we had on GU, we had a push up, we had a pullback. Right now we've had a push up, now we have a corrective move, more of something like this, more of something like this. So the price may come down here, then move above, test this point and go up. Alright, so we may have something like this. Alternatively, the market may also break below this point like this, then pull back and do what? Go down. Okay, so for now, the only thing I'm expecting is I'm expecting to see what the market will do around this area. Let me change the color of this. I want to see what the market will do around here. Okay, if the market bounces off this point, then we'll be looking for a buy to the upper side, knowing that it's doing an impulsive move upwards. But the price could also reject this point and drop. If this price drops, then I can expect it to move, as I explained in the daily time frame, to 1.0513 region. All right, but for now, I'm anticipating a drop from here to this place, which will give me roughly about 104 pips. Okay, so this is what I'm expecting from the market, and I hope that you would be able to take advantage of this trading the market. So for this week, where are my points of emphasis? I'll be focused more on looking for opportunities to buy on gold and GU. Please note that in as much as I'm looking at the opportunity to buy, I'm not just going to jump into buy. I'll be expecting some minor corrections or pullback to key levels, and from those areas which I've outlined in this video, I'll be looking for opportunities to buy. However, for EU, it's a 50-50 chance because the market can actually break below this line, or the market can actually bounce off it and move upwards. The only thing I'm sure of is the market is going to move. Where the market is going to move to, when the market is going to move, I'm not sure about it. But once it does, I know how to take advantage of the market. So I'll be waiting to see what the market will do around here. For now, my sell that I've been holding for roughly a week plus now, I'll be looking at it coming down here to complete the bullish move, which the bearish move which I had marked since 2 weeks ago, to make that money. Then from there, I'll be looking for an opportunity to buy. I hope this helps. If there's anything you'd like me to discuss, or there's something you need me to tackle privately, feel free to chat me up on Telegram at BearbullFX, or you can leave a comment below this video and I would happily address you. I pray that this week is going to be better, as we're starting a new month and a new half of the year, and the rest of this year is going to be profitable and peaceful for each and every one of us. Amen. So till next week, take care of yourself, eat well, sleep well, have good exercise, trade and make profit from the markets. Bye bye.